You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, July the 3rd, the new month, 2017. We see our markets are up for stocks, both the S&P 500 and QQQ, the NASDAQ 100 on Friday. We see that the 20-year bond is down, gold is down. Now let's jump right in first and foremost with the S&P 500. We'll get to the NASDAQ. What do we see going on there? We have ended the week with a spinning top. Yes, we do have a weekly vertical crossover. We will call that for the prior Friday, the 23rd of June. We're very hesitant in doing that. It's taken it a while to actually roll over. And again, this spinning top for the week ending the 30th of June is really a lot of indecision, not as indecisive as something like a doji, which looks like a cross, but we do have it tending down. The prior spinning top we had was a green open box, and prior to that was a red open box. That was the week ending the 16th of June. So we have the market really sliding sideways since the 9th of June, when it really topped out and is now really just pretty much gone sideways, now tending down. We know that because the derivative oscillator is losing energy. It is troubling because it's still positive, but the PPO, the price percent oscillator, is moving away from the red signal line. So that does make us feel better about what's going on. Now let's look at the 2-day chart. We see the 2-day chart is a red, we have a number of red candles, and the last two candles are red down candles. Now they have long down wicks, then they also have wicks on top, and we see that the last 2-day candle that just finished forming on Friday the 30th has ticked down as far as the PPO has moved at a greater angle away from the red signal line, which is a good sign for continued down movement. And we see the derivative oscillator has also heated up in its downward momentum. Now again, some of you might be saying, why does anyone want to follow down movement? Because there are inverse funds like SH, which moves up. It is the short of the S&P 500, and it goes up when the S&P 500 goes down. So there are ways to make money when you can read a chart, whether the market's going up or down. What we're trying to do is make that binary decision. Do you get in or do you get out? And again, that is with which fund? And inverse funds. You want to know more about those? We have a great teaching at the chartingwealth.com website on inverse funds, how to make money when markets crash. So it looks like overall the market is trying its best to top out on both that 2-day chart and the weekly chart. And of course, lastly, we will look at that 4-hour chart. Again, what did we see happen over the course of the day? We've really just seen over the course of the day a sideways slide. Ended the day on a doji on that 4-hour chart. So let's continue to watch, see if we see a nice backup at some point so we can find a good clean entry point, because we haven't had one yet, even though we did have that weekly vertical crossover back on Friday the 23rd, and the market is trending down. We just haven't had that pullback that we require. And you want to know more about what we're talking about on pullbacks. We want to have both our 2-day chart and our weekly chart going in the same direction. Then we want our 4-hour chart or our 2-hour chart. The bigger the chart, the more reliable it is. We want that chart to move in the opposite direction. It's what we call a pullback. Then cross back over in the same direction as the weekly and the 2-day. That has not happened. We've seen the 4-hour just continue to move down, so we've had no buy-in point. You might say, do you have to have that? No, you don't have to have that, but we like to have it. And guess what? We want to trade when the charts are perfect for trend following. We don't want to just get in anytime just to get hammered, okay? We're not about losing money. We're about making money in these virtual trades. And again, I'll remind you, we're not a stock calling service. We're an education firm. And of course, we want you to practice with us. And when you get really good and you take the knowledge that we've shared with you, what you've learned on your own, what you've learned elsewhere, what you've read and studied and tried and practiced, put it all together with your own trading ideas. And when you feel confident, you alone, then you spend your own money. Now let's keep moving through these charts a little more rapidly. The Qs was down just a little bit. S&P 500 is down was up 0.19%. Qs was up just a little bit at 0.04%. I'm looking at that red spinning top candle making me think down. That is what happened over the course of the week. We did have the derivative oscillator heat up in its downward movement, and the S&P, we see a real kink over going down on the price percent oscillator away from the red signal line. We go all the way back 2 weeks to the week ending the 16th of June when we saw that weekly vertical crossover going down. Now, as we plug in a little deeper, we check out that 2-day chart. We can see that we had that 2-day chart rotate over going down back on the 12th of June. And then, of course, that was followed by the 16th when the weekly vertical crossover. Then we had 6 days, 3 2-day candles of up movement, and then the last 2 2-day candles, representing, of course, 4 days, not difficult math there, have been down. And, of course, price movement is below the 2-day trend line. Now, let's look at the 4-hour chart here. That's the kind of pullback chart we like to see. The market pulled back, crossed over going up back there on the 20th in the morning, moved up until the 27th, crossed over going down, and your jumping in point was right there in the afternoon or there in the morning on the 28th. So either the afternoon of the 27th, but really that candle did not close until the end of that day. So the jumping in point would have been the morning of the 28th. And boom, what have we seen happen? Well, we have seen there the opening, let's see, well, somewhere around about the 138 to 139 point. And of course, we've seen things down to 137.76, actually as low as 136.30. So again, that's the way that we like to do it. We like to see that pullback in the opposite direction of the big candle, the big vertical crossover, the weekly and the 2-day, and then we like to see that rotation over going down and your jumping in point. So that's the way we technically like to do it, and it's the way that over and over and over and over again, my friends, tends to work. Okay, let's keep moving through these charts. We'll continue to watch what goes on the Qs over the course of the week. Has this market really topped out as far as stocks go? It has been a long, long time going up. Heck, guys, we're going all the way back to 2010. Then you can see the market through ebbs and flows continually moving up, 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 up. Has it finally topped out? Who knows? We'll continue to watch it. Remember, we're trend followers. All we care about is where the trend's going, and we will ride that trend as long as it makes money for us in our virtual trades. Now, let's go from the stocks, head over to the bonds, 20-year bond fund. We've been out of this for a few days now. Why? Because it's not been looking very good. What do we see going on the 20-year bond fund? We see that we've had a down week, a red open box candle, big wick on top, a wick about a third of the size or so on the bottom, open box. Derivative oscillators losing energy, and our PPO is flat. It is not moving down or up, it's just moving flat, which is we can see from price movement. Now, as we zoom into the 2-day chart, what do we see? We see a huge crossover going down over the last 4 days. The candle ending on the 28th started that down move, where precipitously it fell off from the prior topping of TLT back on the candle ending on Monday, the 26th of June, right at the beginning of the week, and then moved over in a big red down candle with no wick on top, a little wick on the bottom, mostly down, strong movement. And of course, we've seen that 2-day chart rotate over going down. So again, strong, and we can actually change. We now have a confirmed vertical crossover going down. That's on the 2-day, not on the weekly chart. And the thing that's so beautiful about how easy it is to work these free stock charts, I just absolutely love it. It is the best system that I can see. And again, if you sign up for our daily market reviews, which always includes this weekly market review at the website by just putting in your first name, your email address, you'll get, among many other things, the layout that we use at freestockcharts.com with the directions on how to get it and get your stock charting software or app for free. Okay, let's keep moving through here. Now, when we look at the 4-hour chart, what do we see? Well, the 4-hour chart could be starting to bottom out. We'll keep an eye on things. Now, remember, we just lost our 2-day trend line, so we were hoping maybe things would switch over. And again, if it is a strong day on Monday, it is possible that we could see that pullback cross back over. If you see on Monday the bonds take off moving up in that 4-hour chart, cross back over going up, and it's enough energy moving up that it pulls that 2-day chart from crossing over to going back up, because that's not engraved in stone. You guys have seen that with strong price movement. If that TLT takes off, keep an eye on it. It may give you a trading opportunity this next week. Not too likely, but it is possible. Okay, back to our weekly chart. And again, we did great on the run up on that, folks. We had a nice solid virtual profit on that run up on TLT up until the time that we jumped out over the course of this past week. And again, TLT down 0.23% for the day on Friday, and down just a little more was gold at 0.25%. Of course, we have now confirmed at the end of the week, we do have confirmed, and we have to go way back all the way to January 27, where we had the weekly vertical crossover going up on gold. It's finally crossed over going down. We will be sending out notice to everyone who is on our text list. And again, you get on our texting list to know about weekly vertical crossovers by texting to the number 33222, the word charting wealth. And again, for those who subscribe to the daily market reviews, you get the instructions on how to sign up for that also. That will be fired off this evening, letting everyone know that we have a weekly vertical crossover going down on gold. The 2-day chart crossed over going down back on the 16th of June. So we have had that happen. As we look at our 4-hour chart, boom, crossed over going down at the same time in the afternoon on Friday when we had the confirmation of the weekly vertical crossover going down. And at about the same time, we had the derivative oscillator crossover going down. Now again, pay close attention to what's going on that 4-hour chart, because it has moved below the bottom that it had reached around 118.23 down to about 118 or so. So it does appear that gold is continuing to move down. It's at the bottom of the Bollinger Bands, but we have that big weekly vertical crossover going down along with the 2-day crossover, and now the 4-hour also. So watch it 10:30 a.m. on Monday for an entry point after idiot hour at 10:30 on gold. Make sure that this 4-hour chart is continuing to go down, that it hasn't recovered. And if you see that it has, then you may very well have a nice jumping in point for continued down movement in gold. Remember, back just in, back in May, gold had moved down $2 to $3 additional dollars. So keep that in mind. I guess it gone down $2 more from 18. So might have the opportunity to pick up a couple of dollars on gold moving down. Remember, that inverse fund in gold is DGZ, Delta Golf Zulu. That is the gold short fund. So keep things in mind. You might have an opportunity to do a virtual trade in gold and follow that magical 4-hour chart. Folks, that's where we are as we end the day on Friday. As we move into this shortened trading week because of the 4th of July holiday, But again, you have questions, problems, concerns. We love to hear from you here at Charting Wealth. You can write us cw@chartingwealth.com anytime. And again, if you've not already subscribed to our daily market review, do that at the website. You'll be the first to get our new reviews as they become available every day that the market's open, plus our weekly that's provided to you over the weekend. We ask that you please print out as many copies as you want of our trade worksheet so you can keep up with your trades, learn from them, document them as you do them. It will supercharge your training. And again, 10 minutes a day is about all we ask. And print out those daily market worksheets, weekly market worksheets, fill those out as you listen to the podcast. And again, practice and learn. It is the only way you are going to master this. It is mastered by practice. How do you get to Carnegie Hall? Practice. How do you become a master of the charts? Practice. And folks, once you can read these charts, you can do the math. It can mean early retirement. It can mean a nice retirement fund, growth in your 401k, any number of things. We're not promising that, but we are here to provide you with the training so you can practice it with a virtual account until you get it down. Then you can make up your own mind how to spend your own money. God bless you so much, my friends. All the best from the team here at chartingwealth.com.